Okay, so today Bitcoin is just moving below its 200-day moving average here. We're just going to get the chart populating here, and then we're going to take a look at what we can see for this market. On the left-hand side of my chart screen here, we've listed the 200 moving average here. It's the this white line coming down here, and as you can see, we've literally come up and just touched it and had a very a rejection off of this, and we're back into the center band of this resistance level. And in that, we've had another instance in the past where the 200 moving average has came up and touched this this area. Let's go take a look at what I'm talking about here as we go back further in the chart. Let's compress this a little, and then we'll go take a look at the previous campaign where we did see this move happen to show us a 200-day moving average, where we came up and we had a very strong rally before moving back down. And here we are with the market that showed us the 200-day moving average here. And in this time, this was in 2022, and at this period was the March 22nd swing top here, just after our very major high here at 69,000. And I want to talk about this because this is the one other time when we've pushed up against this 200 moving average and we've had a pullback. Now, I've also pointed out on here that my moving averages here are the 22, the 45, 90, 120, 135, 180, and 200. I'm using the proportionate parts of the circle for our moving averages. They help us to make determinations whether or not the market is getting into a strong or weak position, whether or not these lines cross each other and signify another move down. So inside of all this data that we have from these moving averages, the previous campaign showed us very strongly that the downward move was continuing. And in bear markets, when they take place, the asset doesn't spend all its time moving down. It spends most of its time grinding and fighting its way up, trying to suck you into these bear market rallies. And you can see we had another one here that was long and drawn out. And I just want to measure these two really quickly with you so that we can make again another determination as to how far, how long out we can expect these to go. So this one was 68, where it made its top underneath the 200 before having a tumultuous drop off. However, it did not break its bottom until after 100 days. So this is something to watch out for in our our present campaign. So let's just go back and let's take a look at our current market cycle, and we will make a determination off of this bear market low here. And as we've been stating in previous campaigns, the market spends most of its time grinding sideways and upward, and it spends the least amount of time moving down. These moves are extremely fast, and they catch most traders completely unaware that the market is going to move down. However, using our simple moving averages, they clustered up these three top averages here, the 90, 45, and 22, clustered here and showed us that the weakness was still prevalent and that the bear market was still intact. Again, taking a look at our moving averages, again, they're coming up, these three averages, the 22, 45, and the 90, and they're clustering in this area. They are starting to show some strength by getting over our higher value moving averages. However, we've been arrested by the movement here on the 200 moving average and the 180-day moving average. So to me, we have, a possible another retest of this area in the low 80s, and then I believe it's my belief that this bear market campaign is still intact and structurally looking for another move down to the lower levels, somewhere around that 30, 35 for a low or a bottom. And then of course we have the 40 and the 50 level. And let's go have a look at some of our tools here so that we can make another determination. As you can see, Bitcoin moves down two sets of Fibonacci frequency resistance levels before being arrested and having a sideways channel move. And again, we move down from this area here, 1 and 2, right into this, well, pretty much 2.5, but let's just say 2 for now, given that we didn't quite make it down to the third. So what would that look like moving forward here? In our determination, another 2-point drop would bring us down to, well, our 58 level for sure. And from this point here in the middle of this Fibonacci channel, a 2-point move down would bring us down into this 49. And I've also noticed from previous campaigns that this red line here, this Fibonacci line, which is the 23.6, we have come to this in previous campaigns. And if we just take a quick look back again at the previous campaign, I've got our Fibonacci set up on it from the low, and you can see now that from our low we actually came back up and or we came down and touched this 23.6 Fibonacci level before finding a low and a bottom. So I'm expecting something very similar to this in this campaign that we're in now. So let's just be mindful that the past is but a repetition of the future. It's not exactly the same, but it rhymes and it's really close. Will we be having moves of 93% and 80% like in the past, or will we get a 70 to mid 70 percentage level pullback? And I think that's much more likely to occur, especially given that we have a lot of diminishing returns. And I expect that from this area here, let's just say we bring our tool down here, and this gives us a convenient 66-67% pullback to this 41 area. And of course our 70 and 72% level is going to bring us a net 35,000 Bitcoin. Are we going to see that? Well, in the past we have seen those market metrics take place, so I'm very strongly of the opinion that we're not out of this this bear market, and that we still need to see more, I guess, downside or pain, if you want to call it that. But I still think that our distribution and accumulation cycle has not finished yet, and we still need to see into this October period where a low is expected based upon the time cycles that we've stated in the past, where the market likes to make a low 12 and 13 months and sometimes 14 months from the all-time high. So looking at the market metrics we have here regarding that, it's looking an awful lot like this market is getting ready for another flip-flop. I've been saying this for a couple of months too. We've got past our 59 low, or 59 days. We've also surpassed our 69 days here, and we're still eking along sideways here. We're still in this bear market rally, and like I've stated many times before on this channel, that bear market rallies in these structures, they last longer than human emotions can take it, and by the time that you get tired of watching it and you forget about it or put it to the side, then it just turns out that the market turns over and you most of the time miss this period. So I just wanted to point this out, that we're inside this bear market rally and we're starting to see, some breakdowns. However, we still need to see a conclusive breakdown underneath these lows here of the 75 area here. And if we do have a confirmation of this, then the market will continue to move down and we would be touching these lower levels and again into this 40 level. I've been stating that we should be moving down to these levels. However, this market has been continuously moving against most of analysts, including myself. It's moved against my time frame. However, within this period, we will see a breakdown. We've just had the chair position taken over by Warsh from Powell, and typically when that happens in the past, as I've shown you in a video, a few videos back, that when we have a new Fed chair, that the market eventually rolls over and looks to find a new bottom where distribution is taking place and accumulation therefore begins. So I wanted to just point this out, that while we're grinding along here, don't get too complacent that we're in a bull market, because we still haven't broke up into the band of our last campaign here. Right? We're not really into this. We came up and we challenged the wick down here, but we've met a lot of overhead resistance here, a lot, and our 200 moving averages come down here, which is spoke about by a lot of analysts, and of course they hold to that quite fiercely. It is possible and likely we come up and retest this area here, where this white trend line comes down from the top, and that wouldn't surprise me the least bit before we get some more weakness and retest these levels here of 71, the 74, 75 area here off of these two bottoms. And once we lose these, then it's back to retesting this 71 and down into our low part of our 60s and this 59. And if we don't get some grip on this one here, then it will be for sure moving down into the lower parts of the mid 40s and the high 30s. So that's what I got for you today. I hope you've enjoyed our technical review of the 200-day moving average, the fact that the channels on these bear markets tend to move longer in the upward position and sideways position than they do spend their time coming down. So once this gives way, it'll be very, very sharp and quick. Again, like these last two campaigns here were very sharp, very short, and very quick, and they caught all kinds of traders right off guard. So with that, guys, peace and love, brothers and sisters.